Yesterday morning, we learned that Kontoor Brands, maker of Wrangler and Lee jeans, is buying Helly Hansen. That is a global outdoor and workwear brand for roughly $900 million. This is a major move for Kontoor, which was spun off by VF Corp back in 2019. Spent the next few years trying to stabilize its denim business during the pandemic. Terrific business. After years of cost cutting, they're back in growth mode, and that includes making acquisitions. On top of this deal, Kontoor pre-announced the fourth quarter results, delivering a comfortable top and bottom line beat. There's a reason this stock shot up $3.50 yesterday and a bit more today. So can it keep climbing? Let's dig deep with Scott Baxter. He's the chairman, president, and CEO of Kontoor Brands. Learn more. Mr. Baxter, welcome back to Mad Money.
Hey, Jim, how are you? It's good to be back.
God, I'm so glad you're here. All right, so I have to tell you, I polled everyone in the office. Everybody knew about this company. Everybody had either some foul weather or they had some ski or I had some jackets. I saw HH many times, never even knew what it was, just knew that I liked it. How did you spot this one and how did you get it?
Well, I'll tell you, that's great to hear because, you know, Jim, it's a small market for us in the United States. One of the reasons that we got it was because it's about a $140 million business here, and it should be much bigger. It's $100 million in Canada. We got it through a relationship with CTC, and you know those folks up in Toronto, just a terrific group of people. Greg Hicks and his team have been absolutely wonderful to deal with. We knew that we wanted an outdoor and or a workwear company, Jim, and here we got both in this acquisition. So it was a really nice fit for us. And now we've got a growth opportunity. You know, it's growing a little bit faster than the denim business. And I think the other thing for us, Jim, is I've got a strong background in outdoor, as you know, and our CFO, Joe Alkire, has a really strong background in outdoor. So it'll be a really nice fit for us going forward.
Now, in terms of the price points, I looked at it on Amazon. I mean, you've got stuff that's inexpensive that frankly is terrific and stuff that's a little more expensive, but this is really a brand new kind of category for you. I mean, we're talking about some $300, $400, $500 stuff. Do you have the right people? You have denim people. How are they going to do this?
Well, I'll tell you, one of the things that we're going to do, Jim, is we've got a really good technology platform, and we also have a really strong back end of very experienced people around the globe. We're going to go ahead and merge the back end and the technology piece, and the business itself is going to be a standalone SBU that's going to report directly to me, but we're going to let the business stay because we have such a good team there, very seasoned team that's been there for a very long time. They've grown the business now 3x over the last 10 years, and we think that's one of the big advantages and why we bought the business.
I know, it's sensational. How about Europe? What's going to happen there?
Well, about half of the business is in Europe, you know, about 75% sport and about 25% workwear, and we're going to continue to grow that business. We think that the big opportunity is here in North America, so that's where we're going to go ahead and put some assets in place to make sure that we help that and aid that along. But we think that we can continue to grow about $650 million business, Jim, and there's no reason it can't be $1 billion business in our portfolio.
I thought the same thing. I really felt that this is the biggest thing that could have happened. I also thought, by the way, there was a moment where I said, oh my God, did they have to fight against VF Corp to get this? This is what VF Corp needs too, but obviously, you know, Rack he's got his hands full. He's got to get that balance sheet a little better. But your balance sheet was superb. He could handle this very easily.
Yeah, very easily. I mean, you know, we're going to probably put $200 million or so down on it and borrow about $700 million. Puts us in a really good position. You know, our balance sheet has been very strong for a few years now. I think, Jim, most people wanted to know what we were going to do with our cash. We already pay a healthy dividend. We've been buying back stock. But we were patient, Jim. We've looked at a lot of deals here in the last few years. And this one came and we moved really quickly. And like I said, it was a really good transaction with a really good group of folks. And we made it happen quick.
Now, I know a lot of people focus on denim. I bought a lot of your stuff on Amazon, a lot of shirts. I mean, you know, shirts that I think, I'm going to mention a competitor, okay, that are, I'm going to mention Carhartt. I think they're every bit as good as Carhartt, and they're usually not half the price, but maybe only a third of the price. There is some, I mean, Carhartt has got a huge markup, but there's plenty of room for you to actually have a little bit higher price.
You know, we do a really nice job going all the way from, you know, maybe $20, $22 all the way up to $75, $80. Right. Some of our Western shirts are very expensive relative to the marketplace, but they're worth it. You know, they've got great style and great design. So we run the whole gamut in most respects from a shirt standpoint. But we also, Jim, like I've said before, and you and I have talked about it, we just offer a great value. You know, one of the things about our brands is they're a value and a brand that you can trust, and that's why our consumer likes us so much.
Absolutely. Now, I do think there's one thing. Steve will put out a piece today, which talked about you being perhaps the most sensitive to tariffs Now, tariffs are tricky. We don't know all that's going to happen. Can you ameliorate it? Do you have room? That's one of the reasons why I said your price is low. If you have to, I know you don't want to pass it on, but you'll be okay.
We'll be okay. We've got a really strong back end. We have a plan. We know what we're going to do if that does come in place, and we're in a really good place with our consumer right now. So I feel real confident no matter what happens, Jim.
All right, good, because I know when you pre-announced it, I said, oh, they must be pretty darn confident. I know you are. Now, when I look at HH, the stuff that I have in my closet, right? Why did I never know who HH was? This is what's so interesting to me. I know Timberland, I know Columbia Sportswear, I know Patagonia. This company is so undermarketed in our country that we don't even know if we own any of it.
See, that's exactly it. And again, back to those green shoots. I mean, just what an opportunity for us to go ahead and grow this market. This is far and away the largest outdoor market in the world, right? And here we've got a small business that we can make much larger. I'll give you an example, Jim. Canada is a $100 million business for HH. In the United States is a $140 million business for HH. We know how big that business should be in relation to the Canadian market, and we think that that's one of the key reasons why we were very interested in the brand. But it's really popular, Jim. It's funny, when you go to Europe and you go to Canada, it's extremely popular.
Well, I wanted to know where it's going to be. I mean, is it going to be like North Face, where you have some standalone stores? Is it going to be wholesale? Obviously, DTC, you guys are unbelievably good at DTC, for those who don't know that. Where am I going to spot it?
All of the above. You just nailed it. So everything. They have about 50 stores right now, big wholesale partners around the world, DTC, e-commerce. We'll just go ahead and make sure that we bring those to life in a little bit more bigger view.
And now, when you talk to your friends at VF, I mean, you kind of really outperform them mightily. I know it's not really a contest, but do they look at you and think, well, maybe we just should have kept you?
I'm not so sure about that. I don't think they'd ever tell me that. But I'll tell you this, we're thrilled that we were spun off. We're thrilled that we're an independent company because we can do great things for our employees and we can buy these great brands and we can do great things for our customers. And I got to tell you, Jim, it's been a lot of fun. It's been a great journey with a great team, and we're having fun. And
I do want people to know that I met Scott right when it happened first, and he had a vision of what could happen. A lot of us were thinking, oh, my God, that's not the jean company. It's what I might have worn when I was growing up, but I don't do it anymore. You had a vision of what it could be, and it's exceptional. And I really applaud you for what you've accomplished, Scott. It's just pretty amazing.
Well, thank you, Jim, and thanks for having us on.
Of course. Great to have you on. That's Scott Baxter, Chairman, President, CEO of Kontoor Brands. This is a terrific company. And what they did with this HH is just going to be great for years and years and years. That money's back after the break.
Coming up, UL Solutions might be known for its safety marks, but does the company have Cramer's stamp of approval? His post-earnings exclusive is next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.